All right, traders, I wanted to do a little lesson here. I am currently gotten long the pound dollar, and I want to talk a little bit. As you can see, we're down money right now, down 27, 28 pips. We've been down even more than that already. And I get some comments sometimes, people who pay to follow my trades and pay to see what I'm doing. A lot of times I get emails that are like, I don't understand why we're involved with this trade, and I don't see what you're seeing, and I need more clarification on this before I can feel confident. Guys, this is one of those things where this is why I think the insider program is so valuable, and I don't mean to be pitchy on it, but the reason that I think the insider program is so valuable is because we work over the course of the time that you're there to teach you some of the skill sets. And the longer that you're involved with the trade reviews, the midweek reviews and things that we do, the more you see the rationale behind why I trade the way I trade. And guys, it doesn't change. It doesn't change from one day to the next. So if we're looking at, for example, a bat pattern today, and we're looking at a Gartley pattern tomorrow, we do pattern recognition here, and we analyze the pattern to determine where markets are likely to reverse, and then we take our positions based on that. And as you can see, we got short around this 886 127 extension. You can actually see there's 886 right here. This is a bat pattern. I'm going to draw it in for you. Let me grab my little tool here, my little line tool. That's a ray. That's not right. There we go. Boom. To there. And there. Whoops. And here. Back down to here. And to there. And then all the way down to the 886, which is where we're at right now. Now, we got to give it a little bit of breathing room here. This is a technical bat pattern here. Yeah. If I can get the right tool here. I'm using a new keyboard today, guys. Bear with me. This is a bat pattern right here. And there are ratios that go into this, and I'm not going to get into all the ratio retracements and things like that identify this as a bat pattern, but this is what it is. And the issue is that the lows come in way over here at around, if I bring in my little deal here and we take a look at it, the lows come in around good grief, 160.58, or is the low. So our stops have to be below that low, because if this extends all the way down and retests the lows, this is still technically a bat pattern. If it comes all the way down here. Now, as you can see, there's inside this zone that we've identified here, there is a significant amount of activity that's occurred. We've come in 1, 2, 3, 4 different occasions, and that has held. And so this presents a really good opportunity, a low risk, long entry. Low risk not only because the risk reward is nice, but low risk because the market has already tested this zone and has told us that this is a key point where the market has found support. So we're watching it again in anticipation that the market is going to find that same support, and we have a pattern formation to back it up. And this trade may end up being a loser. It may end up being a winner. From my standpoint, it doesn't really matter. Because over time, I know that the probability of these patterns paying off is very, very good. Not only that, but my risk-reward profile, what I'm risking compared to what I'm going to take back, is always significantly better than 1-to-1 on these types of trades. And so when we take a look at this and we're trying to make a determination as to what we're going to trade and why we're going to trade, having that knowledge and being part of signal services or alert services is largely detrimental to traders if you don't have the why behind what's happening. And most of the time, with the majority of the type of signal services and things that are out there, what you're really getting is just simply a call. It says, "Hey, buy them here, sell them here," and you're sitting back going, "Oh, I don't understand why." What? And all it takes is a couple of losers. If nobody's explained to you why those were losers or what happened with that, before you start questioning whether or not this is really valuable. I mean, I remember the other day we had a New Zealand trade, a beautiful Gartley pattern setup, and I just went through yesterday with the insiders on a trade review, and we talked about that New Zealand trade. Beautiful Gartley pattern, right along trendline support, perfect buy pattern, nice risk reward profile. And what happened? We had an earthquake in New Zealand, and the market rolled over. Now, would the market have rallied if we hadn't have had that earthquake? I don't know. But I can tell you that that was the cause of us being stopped out. So the trader gets to come back in, they get to see exactly why what we were looking at. What was the rationale behind the trade? Was it logical? Did it make sense? Was there a good risk-reward profile? Did we stand to make more money if we won than if we lost? Did we use good risk management? And then, of course, what's the rationale? Why did we get stopped out? Was it just a matter of, hey, this pattern didn't work out, or was there something more to it? Was there a natural disaster that occurred? And then, of course, we turned around yesterday and hit Canada for over 80 pips, dollar Canada for over 80 pips, recouping the vast majority of those losses. And that was a quick trade that got put out, and of course we reviewed it and we talked about it in the preview, so everyone who was in the position understood why they were in the position, why I was in the position, why I was taking the trades that I was taking. And it gives you insight. It gives you a chance to see what's happening and understand what's happening, not just simply taking signals, because our goal, of course, is to move you to a point where you no longer need our help here, where you're coming at the market and I can go ahead and put out maybe a buy or a sell, and then you can go and say I am long or I'm short, and then you can go and say and look at your chart and say, oh, I see that bat pattern, I see what Jason's looking at. And then you can make a determination, does that fit into your trading plan? Does that fit into your risk management? Does that fit into your personal trading goals? And make a determination as to whether or not you want to take that trade or not, or whether you want to follow me or not. And again, we don't make recommendations. We're not suggesting that you trade. We've got, what I do is I put out, here's my trade, here's my stop loss, here's my profit target. We don't talk about position sizing at all, because that has to do largely with your personal risk tolerance and the amount of money that you have in your account. But I do talk about and share what I'm doing and why I'm doing it. And guys, that's powerful. That is a powerful, powerful tool that you can take with you every single day to make decisions, because you get to learn the thought process that goes into the trades that we take. And as you can see, there's no fancy indicators on my chart. There's no, whiz-bang secret system. The stuff that we use here has been used for generations in the market to determine where prices are likely to go, where they're likely to terminate, and what the market is likely to do. The chart will tell you what the market intends to do. And if you know how to read the market, if you know how to read the chart, you can read the market. I had one of my clients, Andre, who's become a pretty good friend. He shares a lot of his trades, and a lot of the stuff that we put out is stuff that he's identified. And Andre says, I've learned the language of the market. I've learned to read the chart like I read a book. And it tells me what I need to do. And guys, that's such a powerful statement. And that's something that you can take with you once you learn the skill of trading. Because guys, once you learn the skill of trading, guess what? You don't have to worry about whether or not you lose that job, or whether or not you're going to have, your industry is going to be expanding or contracting, or whether your business is going to make money or lose money this year, or whether you've got enough clients in order to support what you're doing. All you need is a market that's open. And you can take that skill and transplant it into that market. And you can trade it profitably. And that starts with understanding how to read the chart, understanding how to read support and resistance, understanding then advanced pattern recognition, and of course trading psychology to wrap it all up, because we all know if our mind's not right, that we're not right. If we don't have our head in the game, if we're not disciplined in our trading, it doesn't matter how good our trading system is, we're not going to make a profit, because we're constantly going to be changing the decision that was made, or constantly changing what our trading plan says to do. But guys, about a 10-minute video here. I just wanted to share with you one of the positions I am in, and I'm going to come back here in a minute. I'm going to show you guys what how this thing turned out, and we'll see whether or not this thing was profitable or not. But I want to show you guys down 30, 40 pips. This was, it went right through us. We got long, and it just rolled right through there, and we're going to see whether or not this ends up being a profitable trade or not. But whether it's profitable or whether it's a loser really doesn't matter. The question is, at the end of the day, did you follow your rules? Did you do what you set out to do? Did you follow your trade plan? Because if you do that, and your trade plan is a profitable one, you're going to make money long term. So stick around. Be another video out a little later on to show you how this trade played out.